Hi, I'm Dawn Hallman. I'm an estate planning attorney in Norman, Oklahoma. I've been doing tax and estate planning for over 20 years, and today we're going to talk about deferred sales trust. I was asked to write an article for the Oklahoma Bar Journal on deferred sales trust, and there's actually a link at the bottom of this screen, the YouTube video, that will take you directly to my article. But what I found out when I was trying to do the article was that there's not really a whole lot of information out there that's cumulative that really explains how a deferred sales trust works. Found some good information, bad information, wrong information, and some sales pitches. So my goal today is to give you an overview of how a deferred sales trust works. And then we also have another video that will cover the more intricate details of mechanically how it really works. And then after reviewing both of those, if you feel like that this is an option for you, certainly feel free to give our office a call and we'll be happy to give you an evaluation, work with your financial planner, your CPA, your tax advisor, and even your own estate planning attorney to see if this is a piece to your puzzle. So let's talk about a deferred sales trust. What's a deferred sales trust? How does it work, and what are the pitfalls with it, and what are the obstacles, and what are some of the frequently asked questions that are involved? We're actually going to break this up into a two-part series. So this is part one, where I'm going to give you an overview of how it works so that you can think, well, is this even possibly something I might be interested in? The second series of this will then get into more of the details about how that it works, if this is in fact something that's a possibility for you. One of the first questions that we ask our clients when they come here is, have you already consummated the deal, right? That means, are you under contract in my line of work? Are you under a contract? Have you already signed the contract to sell your closely held business or your highly appreciated property, your commercial property, pile of rent houses, whatever? Are you already under contract? If you are, hit stop on this video and don't waste your time. I know that there are definitely some information out there that says you can do it after the fact. The IRS opinions are no. So if you've already inked the deal and it's set in stone and it's going to sell, this is not a good option for you. You certainly can contact our firm. We have some other ideas and some other options, but this isn't going to be it. So what's a deferred sales trust? So if you passed step one, you're not under contract yet. So what's a deferred sales trust? Well, oddly enough, it is a trust. The name deferred sales trust is really kind of recently started being used. Historically, before then, it was called an installment sale trust. It essentially is a trust that is designed to, it's a trust that's designed to not have to pay all the capital gains at one time when you sell highly appreciated property or closely held stock. It's designed to take back an installment note. So that's under Section 453 of the Internal Revenue Code, which has been around for 80 years. So this is not a new concept. I think the marketing of this has been new and the application has kind of been new. And I think that definitely different firms have taken it and put different spins on it. But in its purest form, it's an irrevocable trust, okay, that the seller actually sets up. Now, if somebody else is setting it up, okay? So if I go, well, I've read things for clients that are called a deferred sales trust, but it's an entity unrelated to the client that's actually the grantor, that's the person setting it up, and obviously an entity unrelated to the client that's the trustee. And in that particular trust, there was no beneficiaries. It was treated like a corporate trust. In the deferred sales trust, what I would call the organic deferred sales trust, the client, the seller, is the one that actually sets it up, the grantor. There are beneficiaries to it. There should be. That should be the client's family or charities or kids or grandkids or friends, relatives, whoever. There should be beneficiaries that would get anything left in here when the client dies that's above and beyond really what the installment payments back would be. Okay, so clients, the grantor sets it up. It's an irrevocable trust. Now, true to a very, like I said, an organic, if you will, like more irrevocable trust, the seller cannot be the trustee. The seller cannot have any incidences of ownership, meaning the seller can't be a direct beneficiary of this trust. The seller can't control it. The seller, essentially you're creating the wall between you so that it is an arm's length third party transaction, okay? And there have been cases where, a seller tried to name his son-in-law as the trustee. Yeah, that didn't work, shockingly. And so trustee has to be third independent party, okay? So we have third independent party as the trustee. We have a corporate trustee, if you will. So I'm going to then sell, so let's just say for this example, we're using closely held stock in a company. So I have this company, it's, it can be worth any number of dollars, but I'm going to sell it. I don't want to just sell it I don't want to just sell it outright. So if I sell it outright, I'm going to have to pay capital gains on the sale for the whole total, or, the difference. I get it, CPAs. Email me later. I know the difference. So I don't want to have to pay all of that at once. I would love to take the gross amount of the sale and have it invested and working, and I would like to take an installment payment back, meaning I want a payment over time. Well, what is the time frame that I can get the payment? Well, it's my favorite legal answer. It depends. If I'm 30, which I am, no, I'm kidding, I wish I was. If I was 30, obviously the IRS thinks my life expectancy is longer than if I am 80. I look really good for 80, by the way. I'm somewhere in the middle of that. So if the IRS, if you're 80, then, it's going to be a shorter installment note payment timeline than if you're 40. At the end of the day, though, it's not a certain fixed amount. So, it's not like I can't tell clients, it's a 10-year payout. Well, it might be. How old are you? Are you male or are you female? What do the IRS life expectancy tables look like? So the length of the payout depends. So the installment note comes back to me. So I sell the asset over here into the trust, third-party trustee, I take back an installment note. So the installment note's an agreement to pay it out. So as long as all the little procedures and rules and everything fits nicely inside the requirements of it, the IRS says, look, seller, you only have to pay capital gain on the amount of the promissory note you get paid back each year. Okay, you do not have to pay the full amount of the capital gain in the year of the sale. That's hence the reason it's called deferred. The other great thing about deferred is not only are you deferring the capital gain payment, the amount of money that then gets reinvested, and we'll talk about how that works, but reinvested, or whether that's in real estate, property, with your financial planner, whatever, the amount of money that's reinvested is a gross amount as opposed to a net after-tax amount if you just taken the sale proceeds as a lump sum and paid the tax. So obviously time value of money tells you that that's going to grow exponentially quicker and better than taking the net number up front. So I sell my highly appreciated business. So, okay. I sell my highly appreciated, closely held business to the irrevocable trust. I get back an installment note with terms based on what I need or want. In the IRS tables, we covered that. Then my trustee turns around and sells my closely held business to the third-party buyer, okay, and takes back the chunk of money they pay out, whether they have it, they financed it, whatever. So the cash actually comes back in, small business goes away, cash comes back in to the trust. Trustee then does what with it? Well, my favorite legal answer, it depends. The trustee then will then, depending on the terms of the trust, are they limited? Can they go into, can I sell my closely held stock and go back into mineral rights or commercial property or investments, or my favorite, a little bit of everything? Why wouldn't we want to maybe be diverse, do a bunch of stuff in here? There's no we, right? Because the client can't have control or incidences of ownership, but the trustee. So there's agreements up front secured by your installment note as to the parameters of what secures that asset, right? When there's installment note payments that are not tied to what's in the trust, that's where it becomes problematic. If the trust isn't going to have the ability to pay back the note, clearly that's a concern as well. So there's a nice little mix that has to go in there to make sure that that can happen. And then let's say that I die before the note pays out. What happens? Well, if I die before the note pays out, then the promissory note's held where? It's maybe held in my revocable trust, maybe my family LLC, it may be a part of my other bigger estate plan. The trustee continues to pay the promissory note, okay? The tax treatment is still the same, right? There's still deferred capital gains tax piece on that. But when the note is paid out, what happens to something that's left in there? Because that's obviously the goal, right? We had a gross number we put in there, it grew, it made the payments, and there's still something left. Well, if you are the grantor and you've named beneficiaries, you the seller, obviously before you died, then those beneficiaries are who or what gets it when you die and how they get it, okay, as to what gets paid back from the promissory note. So that's the very high level overview of deferred sales trust. If you think that this is a concept that you want to explore further, go look at our second video that we've got done. Click on our link below to go see my article on deferred sales trust. Visit my website, or even easier, just call my office.